Good afternoon, ladies and gentlemen, and to those who are back in the room, hi again. For those who are tuning in, my name is Bjarke with Maya. I'm the FinTech correspondent for Politico, and I'm so glad that you've all come to this part of the summit, which, as we come to a close, it is the world that I have walked into after a short career in the macro policy-making side of things, and it's been a hell of a ride. To help me get into this, I'm going to welcome in a company which has definitely been in the news as of late. With that, I would love you all to give this man a round of applause. This is Circle's Chief Strategy Officer and Head of Global Policy, Dante Disparte. A round of applause, please, ladies and gentlemen. Welcome, Dante.
Thank you, Bjarke. Good to be with you.
Yeah, how do you find the suit?
Lovely.
Yeah? And
is that Danish design?
Maybe? I'll go ahead and say Italian. Every time I meet Dante, he's impeccably well dressed, and so I felt that I should at least pull out some of the stretches today. But there you go.
And outsmart them, outdress them, I was told.
Well, I'll definitely take that one on for sure. We don't have a lot of time, you and I, unfortunately. So I'll dive straight into it. But I think that it's important for people to know exactly what Circle does, because it might be that there's some people in the room who don't know. So could you just explain what that does briefly, but also explain what is a stablecoin?
Sure. Well, Circle is a digital financial services firm. We're a 10-year-old company, so that's point one. And we're regulated inside the United States on a level playing field to companies like PayPal, Apple Pay, or Stripe, any other major payments company. And our core product is a digital currency known as USDC. And USDC is, in the general crypto term, a stablecoin. We actually reject that term categorically because it's like putting a whole bunch of products on the same shelf, with each of the products being completely different. But nonetheless, the term stablecoin was meant to solve crypto's original sin, which was hypervolatility of original digital assets that weren't particularly great payment systems. And so over the course of 5 years of USDC, we have processed safely more than $10 trillion of payments. And it's a payment system innovation that is powered by internet-connected devices and over 5 years available in more than 191 countries.
So stablecoins, like you say, has many other possible applications, but Circle has made a lot of money from the crypto market as being a safe haven as well, right? Like that's where people can put their money when they're choosing bets online.
Well, so there are two schools of thought, Bjarke, and you've studied this more than perhaps any other journalist out there. There are two schools of thought. There is a stablecoin school of thought in which it is nothing other than a poker chip in a crypto casino. And when I had to go defend this in the Senate Banking Committee in front of Chairman Brown, I said, well, look, a payment innovation in a casino is still a payment innovation. But to ignore it entirely as merely a part of a speculative asset class would be to miss the real undercurrent of what's happening here, which is that we see a global utility value wave taking place with USDC. 75% of all USDC in circulation today is held on a wallet off of a crypto exchange. That implies that the user of that wallet is having a store of value, supporting dollarization, supporting effectively purchasing power parity, and a means of transmitting money that isn't in the hands of monopolies or duopolies, which are the traditional payment systems.
So you guys, you've been in the news lately. 2 weekends ago, you found 3.3 billion of your cash reserves stuck under Silicon Valley Bank, which you managed to get out once the US authorities guaranteed the deposit. So congratulations. But generally speaking, on this, I mean, there was a sort of crisis in this because you broke the peg. So rather than offering parity to the greenback, the dollar, it dropped to 88 cents until you moved forward on some transparency measures, and it rebounded then when you got your money out of Silicon Valley Bank. Now, what's interesting is that the comeback is on. You guys, this week, you announced that you were going to set up shop, or at least applying to set up shop in France. You know, my colleague had an interview with you guys, and you and your CEO, Jeremy, came out swinging, not just against the banks, but also against the EU's rule book for crypto, which is called MiCA.
Yeah.
Now, is this a deflection tactic, or is it business as usual?
Yeah, well, first of all, I would call this chapter of the industry and this chapter of our business the importance of being stable. And so no one has called my peer payments companies or electronic money companies to ask them if they had an exposure to Silicon Valley Bank. But what I can tell you is Silicon Valley Bank was not a fly-by-night bank that was banking a sector that the banking regulators would have told them to avoid. This was a bank that was underwriting innovation across the United States. And Circle, perhaps like other payments companies or payroll providers like ADP, which pays 1 in 6 Americans, had an exposure to that bank. The difference, however, is because we live in sunlight and we're racing to the top as a business, is we disclosed that exposure to the market on the Friday that it was discovered. On the Saturday, before the government intervened in the United States, on the Saturday, we also disclosed that if need be, including from the corporate balance sheet on which we have more than $900 million, that we would also stave off any risk that the redemption promise would always be met at par for $1. That instantaneously restored the peg on-chain. And then finally, the government prevailed. I suppose they took my phone calls, and reason prevailed in Washington. And the real issue, and this is the irony, in crypto policy conversations for 5 years, the entire global conversation has been obsessed with what risk would digital assets introduce to banking and the real economy. And the irony of the last 3 weeks, with 3 banks coming with the letter S, Silicon Valley Bank, Signature Bank, and Silvergate, all failed in a cascade of failures in 3 weeks, we were protecting our business from banks. And so the message is actually a message of an olive branch more so than it is about being combative with banking and regulators. It's actually, look, perhaps these systems are codependent. And perhaps now, from the European context, you're trying to attract companies like mine to invest in Europe, and so we've decided to make Paris home to put these new frameworks to test.
Yeah, but what's interesting, though, is I think one of the reasons why you guys were, the scrutiny was so strong on you guys as opposed to PayPal and the rest is because you've been marketed to the crypto investors as the safest in town.
Yeah.
And I mean, that's what sort of freaked everyone out. But
Yeah.
the other thing, to your point about the banking system and how that was more of a threat to crypto than the other way around, I mean, I have to ask, I mean, if you leave 3.3 billion dollars, sorry, in cash with a bank, I mean, surely that's all going to be insured. I mean, should you have done better due diligence there?
Yeah, no, that's a fair question. That's a very fair question. And of course, like any crisis, the morning after, a whole generation of experts are going to be created. And all of us will have to look ourselves in the mirror. But herein, I actually hope there is a hearing in Washington to discuss this, because it's a more fundamental issue. If we as a society, and by we I do mean the transatlantic we, as a society cannot have confidence in the banking system, which is the only quadrant of the financial services system that enjoys a taxpayer-paid backstop, then we have a bigger problem in our society. And so today, USDC, 100% of the cash is held at BNY Mellon. The irony is the US regulators didn't want big systemic banks to get bigger. But we would have had an extinction-level event of mid-sized commercial banks in America had the federal government not intervened. And so the fox was watching the chicken coop after 2008. Where were the Dodd-Frank regulations since? And do we want to promote an operating model in which opacity is the issue with banking, or we encourage transparency like we have had as a company at Circle and the digital asset industry lives under?
I think it was Barney Dodd that actually blamed crypto in the end for the demise of his bank.
Voilà.
It's been pushed back.
Listen,
it's
a long, long list of issues. You could even blame me perhaps for MiCA and the idea that for the last 5 years, Europe has been observing the opportunity and the risk under the assumption that GAFA or big tech would be coming after money. GAFA is gone. The big tech threat is gone. And what remains are countries and an entire region, I think perhaps has an opportunity to become the most relevant in the world under these new frameworks.
Which is the one thing that I'd like to then close on. Unfortunately, I'd love to have you here more, Dante. See, I can charm too. So the one thing, though, is if you are so critical about MiCA, the rule book that the EU set up for crypto, then what is the business case for you here? Why do you want to then come to Europe?
Oh la la. Okay, so listen, with the street protests and the raging fires and soon to be a crisis on the streets of Paris, there is no better place to be. I'm the first person to say in the entire world that MiCA will be to digital assets what GDPR was to privacy. And that overall it is a net good, but the opportunity therein is the devil is in the details. And if so many of the provisions inside MiCA are totally prescriptive, MiCA requires 30% of its cash to be held in banks. Would MiCA have withstood the bank stress test that Circle just survived? Yes or no? And so some of those things need to be managed, which is why we chose France and why we have submitted for 2 licenses in France, the PESAN framework and the electronic money framework, because we're a company that is regulation first and rules based, and we will demonstrate, I think, over time that Europe is a place where you can build and grow.
Ladies and gentlemen, Dante Disparte, please give your hands of applause.
Thank you.
Should have been longer.
I know. Thank you.
Yeah, exactly.
Thank you.
Please do stay where you are because we're going to continue this discussion. We're from Circle as well. We have Tiana Baker-Taylor who will then come up and join me here because everyone else is online. So as Tiana comes up, please, again, I hope your hands don't hurt, but give them another round of applause so that they can hear you here and in and everywhere else. Actually, Verona, you're actually in Paris. Please take a seat. Okay. Right? Verena, you're in Paris too, but you didn't decide to jump the barricades over here.
Actually, I'm a bit outside of Paris, and that is a bit of a hindrance at the moment of getting into the center and being able maybe to walk to the venue where you are at the moment. So okay. Unfortunately, I couldn't quite make it either today.
I'm going to introduce everyone to you so you know who's talking. For the people online, please give a wave when I introduce you. I just talked to Verena, so I'll introduce her. Verena Ross is the chair of the European Securities and Markets Authority, just outside of Paris, so she let us know. Sitting next to me is Tiana Baker-Taylor, who is Circle's Vice President Policy Strategist, or for Strategy, at the UK and the EU. From Brussels, right, Ernest? You're in Brussels? Okay,
yes, I am.
Yeah, okay, so from Brussels, we have a man from Barcelona originally. This is a Green MEP. His name is Ernest Ortizan, and he helped work on the MiCA proposal that we've been bringing up as the rule book. And last but not least, we have Peter Kerstens, who is the European Commission advisor on the financial sector of digitalization and cybersecurity. And you're calling in from further away, right?
I'm in Nashville, Tennessee.
Nashville, Tennessee. All right, okay. We've got a nice international scene here. So thank you all so much for being here, and thank you, Tiana, for at least giving me some company up on this stage.
Sure.
You know, it was going to be very lonely otherwise.
Happy to.
So it was a good little spar there with Dante. I mean, 2022 was a tough year for crypto all around, and I accept the fact that not all crypto companies and stablecoin issuers are alike. I think we established that beforehand. But it was a tough year. But it was also an important year from an EU standpoint because that was also the year that MiCA, the rule book, was finalized. And it should be going through the plenary in Strasbourg next month. And then into force next year, in the second half of next year. What we're going to talk about today is how MiCA is implemented and the policy challenges we face ahead in a sector which is constantly changing. So now that I've introduced everyone, I also want to let everyone know that I figured out what the passcode is on this iPad. So if you have questions, please do get in. If you're online, there are instructions there. If you're here in the room, just scan the QR code and follow the directions. But please do get involved. Ernest, I'm going to jump to you because as a lot of the legislating was happening with MiCA, you were one of the MEPs that got a lot of industry criticism. So I'm just wondering, also from the stuff that we've been hearing just now, did you and your colleagues go too far and make MiCA too strict?
No, I don't think we went too far and make it too strict. I believe that MiCA is a good first step. My opinion is that every risk should be regulated the same way. And there are certain risks now in cryptocurrencies that need to be regulated in a proper manner. And I have to say that for some of the risk of the crypto industry now, we have much lighter regulation than in the financial industry. So I don't think that MiCA is going too far. We would have preferred in our ideal scenario to apply to the cryptocurrencies normal financial regulation, but this is more difficult because in the EU the financial regulation is very, very fragmented. So we agreed with the approach of the Commission to have a more bespoke regime, but we consider that MiCA is just one step, but that we will need very soon a second part for it, a MiCA II, because we don't have, for instance, the NFTs well covered, because we don't have a proper European supervision. We would like ESMA to have a stronger role in the European supervision, and because the environmental aspect, for instance, is not properly covered. So I think that it's a first good step, but we need to go well beyond that. We did a good job where I think the regulation is good, is on the side of the stable coins. MiCA is strong enough there, I would say. And I would just like to say very briefly that I believe that what happened with the Silicon Valley Bank and the bailout that was done to some of the crypto participants, we need a strong regulation.
Sorry, could you just repeat the very last part again, because you broke off?
Yeah, no, I just want to say that with stable coins, I think MiCA is strong enough, or at least is one of the parts where MiCA is strong. And I think that what happened with some stable coins with the Silicon Valley Bank and the subsequent bailout that some of the crypto actors had to go through shows that MiCA was right in regulating strongly stable coins.
Tiana, I'm going to move to you, and feel free to address whatever Ernest says on that front. But I mean, we heard Dante say that there were specific problems when it came to MiCA. But I mean, I would love for you to unpick that a little bit more. Like, what are the specific issues that you think are problematic in that rule book?
Sure. Well, I agree with Ernst. I think that MiCA is adequate and appropriate regulation for crypto assets broadly. There are some provisions that I think are going to be potentially quite complicated to put into practice. And I do disagree with Ernst that if MiCA were in place with a 30% cash at a credit institution requirement, then that would have, in my view, created even more risk.
Let me just explain that very quickly. So with a stable coin, the idea is that you break it into two. We couldn't get into this because we had such a short amount of time beforehand. So we say 30% what exactly?
So 30% cash deposited at a credit institution.
And then the 70% is?
Well, the 70% is in high-quality liquid assets within MiCA.
Which can be sold very quickly in case there is a need to redeem quickly.
Ideally, there is some kind of question around exactly what the high-quality liquid assets within MiCA means, and that's part of the level 2 process to get some clarity. I think the first thing that I just want to confirm is there wasn't a bailout. We were not bailed out. We had funds on deposit, and those funds were returned to us. So the bailout isn't quite the right word, and it has a connotation that I'd like to correct. So for our business model, we keep 20% in cash, and what that 20% in cash allows us to do is facilitate real-time, always-on redemptions. And you can kind of think about it, if you were a crypto person, a little bit like a hot and a cold wallet. So in the safer assets, we keep 80%, not necessarily safer, but in a longer-term asset, which are United States Treasury bills, which are immediately or short-term redeemable. So that's the balance of the reserves.
And obviously, having a 30% cash reserve only exasperates the problem that you then experienced 2 weeks ago.
I would argue that it would have done, yes.
Is there any way of maybe dealing with that differently, in the sense that you either break it up into many different deposits, or is that...
Sure, but let's talk about that. So I think there's two challenges there. One, we had 6 banks that we held funds with, so we did have a balanced kind of disbursement of our risk, but there is very limited banking options often for companies that deal in digital assets, and I think that's a challenge too, and that's absolutely something we need to address.
But banks are too scared to handle your business, is that what you're saying?
I don't know that it's always that they're too scared, but I think that there's also some regulatory questions about whether they're allowed to. And so I think what happens is there is, a myriad of policy that is impacting the relationship between banking and certainly crypto asset companies. And I think that things like MiCA will help to solve for that. Regimes like PISON have provisions for banking services.
PISON?
So the French regulatory regime. And I think what is important there is, if we want firms to be licensable and operate at a regulated standard, then they need to have services accessible to them, like banking and auditors and insurance.
Is there also an idea that a stablecoin issuer could also have access to a central bank account? Is that maybe one idea that could solve a lot of these issues as well?
Well, we certainly think so. And there was a recent speech by a US policymaker, Nellie Liang, that suggested that should the US potentially undertake a CBDC, that potentially that CBDC could be
being a central
bank digital currency, could potentially be the reserve for stablecoins. Additionally, we think as a prudentially regulated institution, that it would be even safer still versus a credit institution to hold those cash reserves at a central bank. And we have been advocating for that for probably 2 or 3 years.
So you wouldn't like the idea of holding a bunch of these CBDCs, which here would be a digital euro, for example?
We wouldn't like it, or we would?
Yeah, I'm just asking.
Yeah, no.
You'd be cool with that?
Yeah, we would be cool with that.
Yeah, cool. So, Peter, as one of the people who, one of the architects of this piece of legislation, you've heard that it's great. You've heard that it's not so great. How do you plead?
I didn't say it's not so great. I think I, in fact, said it was great.
Yeah, Dante wasn't the biggest of fans, though. No?
No, I think he said it's pretty good, bar a couple minor.
Bar a couple of minor. Okay, so either it's pretty great or bar a minor couple squiggles. How do you plead, Peter?
Well, as with many things of architecture, beauty is in the eye of the beholder, and some people like new buildings, some people don't like it. But I think that this is an area of innovation, and we at the European Commission, we wanted to support the innovation, we wanted to enable it. And if you then regulate, you constantly have to balance risk and opportunity. And so we set it out as indeed not overly interventionist, not overly restrictive, because we saw a lot of opportunity. We still see an awful lot of opportunity in blockchain technology as a future infrastructure for financial services. And therefore you need to have digital assets, and you need to start regulating these markets. And because if we didn't have that, it was the Wild West, and Europeans would be buying and selling and trading and speculating on crypto assets in foreign countries, where there are lots of palm trees, little islands, and so on. And we thought that's no good. So now the European Commission is not saying that consumers should buy crypto assets. We recognize that they are very volatile, that they can be risky, but even if you say don't do it, it's very risky, it's not appropriate, people are going to do it anyway. And because they're going to do it anyway, and there are opportunities, we wanted to shed regulatory sunlight on it. And I think what we came up with is a very balanced outcome. Now, this is a new industry, and it evolves, and so new issues arise. For example, you've been discussing the requirement to hold assets for stablecoin reserves in bank accounts, in deposits, and that was seen as a perfectly sensible idea when this was negotiated. This requirement came from the council because it wasn't assumed that these banks would or could go get into trouble. But what we've seen now with Silicon Valley Bank is that these reserves, which are large amounts, in the case of Circle it was 3 billion, go way beyond what's normally available in deposit guarantee. So these reserves are at risk because you have a credit risk towards the bank. But the law is the law, so we have to live with it. And I would say the legislator is always right. So if the legislature decided that this is the way to do it, we will do it this way until it is changed, if it is ever changed.
But could you imagine that particular ratio of 30-70 and also using bank deposits as a place to put your cash? I mean, is that something that might need to be looked at again in the future?
I don't know. There could be solutions indeed, using more than one bank. Sort of that could be a solution, but we'll have to see. But clearly, what the episode demonstrated is that bank deposits aren't as safe as people assume they are, or as people hope they are. And what is crucial for stablecoins is that the reserves are held in a very, very safe place. So will it be changed? I don't know. Will it merit attention? Most certainly it does. And if it turns out that this is not really the best way to go about it, I think that the legislator in due course will show wisdom and then come up with alternatives. But let's first get MiCA implemented, see how it goes, and then we'll take it from there as to whether or not we need to revise it.
No, and I'll get to that just in a second.
That's one.
Yeah, and I'll get to that just in a second. But the one thing, I mean, Tiana just mentioned the fact that one thing that they would love is to have access to central bank accounts. Now, correct me if I'm wrong, but in Europe, if you have a banking license, then you can have access to central bank accounts. Now, it's not that if you get a stablecoin license, specifically an e-money token license, that you have to get a banking license. But would your advice to the likes of Circle be, hey, get a banking license too, and then you can have it all?
Well, I'm not in the business of advising banks. I'm in the business of advising the European Commission. So whether Circle or any other stablecoin issuer wishes to have or wishes to pursue a banking license really is a business decision for them to take. And getting such a license, there's conditions for it. So I don't know whether they meet the conditions right now, and there are costs to such a license, but there are also advantages to such a license. And it really is a business decision for them to take whether they want to do this based on the licensing possibilities that are under MiCA or as an e-money issuer under the e-money directive, or whether they say, well, look, that gives us a number of possibilities, but it doesn't give us everything we want or we need to do business. And if, for example, having access to the central bank is vitally important for them, that may then lead them to the conclusion that maybe they should set up a bank. But I'm not recommending that. That's really a decision for them to take, because for the time being, non-banks do not have access to the central bank. Can this be changed? Potentially, but that's a completely different debate.
Yeah. Well, what do you think, Tiana?
So, quick response to that would be that Circle's business model does not create credit. Banks are in the business of creating credit and lending. That's what banks do. That's their service that they provide to the economy. And so to be required to or to have to undertake a license to do an activity that we have no interest in doing seems a bit of a mismatch. And honestly, it has been happening for some time in this industry where there isn't a license that is designed for you. And so the industry goes out and gets all of these other kind of plethora of licenses because they want to be regulated, but there hasn't been anything that's been a neat fit. And so you're undertaking regulatory obligation that isn't required or necessary because you're not undertaking those activities, which I think is another great benefit of MiCA because it is very tailored to those activities. I think if we start asking firms, not just our firm, but any firm, to become a bank, to be able to facilitate new business models, that feels a little broken to me.
Too much red tape.
Yeah.
Okay. Verena, I'm going to jump to you here. I've asked everyone what they thought of MiCA. I'd be amiss to ask, what your opinion of it was. I know you'll have to be the one that enforces some of it, but what do you think? Do you think it goes too far?
So for me, actually, we have, as ESMA, always looked at crypto assets primarily with the investor protection standpoint. So it has really been about, what are the risks and opportunities arising from crypto assets for the retail investor. And I think there, MiCA is clearly a good step forward. It provides some protection for investors and creates some important rules for market participants in the common European regime. So it also creates a level playing field in Europe, which I think is extremely important, rather than the very different national regimes that exist in some countries, but not others. So from my perspective, it might not be the silver bullet, but it's clearly an important milestone. And as you say, we are now mainly focused on implementing and applying these rules, as well as equipping regulators and supervisors with the adequate resources. For me, is another really urgent issue to tackle. So we will be prioritizing the work on the more technical regulations and working on that with full attention to all the provisions that are there. We will consult, we will make sure that we also understand properly the impact of the more detailed regulatory standards that we will draft. Another aspect that we will focus on, and I think is extremely important, is the actual implementation of MiCA, and to ensure that even before MiCA becomes fully applicable, we as the supervisors in Europe, the national competent authorities, under the guidance of ESMA, actually tries to find a convergent way of looking at the applications for authorizations, the grandfathering provisions, and actually the ongoing supervisory challenges that will come. And I think that is a big undertaking. It's a largely unregulated industry at the moment. And I think there we have an opportunity to promote really convergent supervisory practices. That doesn't mean that, go on.
No, you had a board meeting this week, right?
Yes, and that's also why I couldn't quite make it physically.
Okay, more excuses, okay. No, so, but did MiCA come up?
Yes.
Oh, it did?
We talked about MiCA.
What a surprise. Pray tell, what was it that you guys talked about?
So we talked about, how are we going to go about this implementation challenge collectively? What do we need to focus on? And we, for example, decided that we will try to do different sets of consultations, because we have a time frame which is for some of the mandates 12 months, for others 18. There are altogether 30 level 2 and level 3 measures, so 30 individual provisions where we need to draft more detailed policy. So it's a big undertaking. And so we also talked about the supervisory convergence challenges. How do we make sure that we take a common view on these issues and are not allowing regulatory arbitrage within the European Union? We are a single market. If you enter the European Union, you will be able to provide services across the whole of the Union. So we need to make sure that the provisions, and in particular the investor protection, actually looks at it in that way and finds a coherent way of the supervisory approach.
So forgive my sin as a journalist for trying to make things more simple, but is it basically that you're trying to set up a neighborhood watch to some extent in order to police any crypto companies that might be arriving on these shores before MiCA is implemented, to make sure that everyone's kind of on the same page? Is that generally the idea?
The idea is that the approaches currently are clearly, and even under MiCA, will be to the national supervisory authorities. What we are trying to make sure is that when the national supervisory authorities are looking at those application, those considerations for how this should move forward, that they look at it in a common way, that we have a common understanding of how to approach it, what is acceptable, what's not acceptable, how does the regulatory regime look in practice. And that's really what we are trying to ensure by putting all our forces together across the European Union.
I'm going to come to you in a minute, Ernest. I haven't forgotten about you. But before I do, I want to jump back to Tiana, because like I said, she was nice enough to be with me in the room. I mean, like Verena said, there will be secondary measures coming along. They're going to have to come up with ways to figure out how to really implement MiCA. I mean, what is the kind of advice, or what are the things that you would like to see or lobby for as things move along?
Sure. So I think that Verena mentioned that there will be consultation with the industry on some of the open areas for discussion. I think there's some key areas where we personally would like to see some greater clarity. So when we're talking about a transaction, a payment transaction, what exactly is that? And a very kind of narrow and specific definition, I think would be more helpful than what we have at the moment. So that's just kind of one example. I have a lot of empathy for both the EBA and ESMA. It is an enormous undertaking in a very short space of time when you really think about it. And I think just working with the industry to understand sometimes things on paper don't necessarily translate easily when you put it into a practical environment. And I'll give an example. So the transfer funds regulation will also be coming into force soon.
Which is where crypto funds are tracked and traced.
Yes. And the EBA set up a subject matter expert group. I was invited to join that, and those discussions over a series of months were very technical in nature. And so it is not a matter of lobbying, but it is an opportunity to ensure that regulators are really as informed as they possibly can be about how these assets move around and maybe implications that they hadn't quite considered in practice, because legislation kind of tells you the rules, but now ESMA and the EBA have to figure out how to implement those rules and supervise those rules and provide oversight for the market. And so I think that continuing those dialogues with companies that are willing to provide themselves as a resource would be my first recommendation.
Ernest, I mean, we've heard what the market would like. In terms of what you would like as a green MEP, I mean, what are the things that you're hoping will come forward in these secondary measures from ESMA and the EBA?
Well, as a green MEP, if you can imagine, I'm very much looking into the issues related to sustainability. I think this is very important. There are some RTSs that need to be issued, establishing some criteria on what kind of sustainable activities should be developed in the crypto world. As you know, this is a very much debated issue. If I'm not mistaken, New York and California have now banned proof of work. Mining has become a pressing issue.
Proof of work mining is the software on the blockchain that is famous because of Bitcoin, just so people are aware. Yeah, go on.
Yeah. Sorry, Bjarke. Sometimes we're using this jargon that nobody can follow.
It's my job to translate it. It's fine.
Yeah, exactly. Yeah. Thanks for that. No, I think this is so on the secondary legislation. As a green MEP, this is where I'm very much looking into that, because I think that, and this is one of the things where MiCA is too short, I would say. I think we do have indeed a major environmental impact with some of the consensus mechanism of the cryptocurrencies, and there with the secondary legislation we will start putting some benchmark and some criteria, but what we need is regulation, and for that, of course, we will need to go back to level 1 at some point.
I saw you nodding your head, Tiana. Do you think that the crypto space has too big of a carbon footprint?
I don't think that what I was nodding about.
Oh, okay. All right, okay. Anyway, no, well, that's all right. Then I'll alleviate you. It's fine. To me, it looked like you were in agreement.
I would be very happy to get into the debate around energy usage, but that's a completely different topic. So,
it is.
But I do agree that measures that work toward COP and climate goals are important. So I don't disagree.
Great. So, Peter, back to you in Nashville. One thing that it's very clear from the crypto space is that it keeps changing, and that legislation that's then built can very quickly become outdated. Do you think that MiCA is at risk of that, and what do you think needs to be addressed in the future?
I don't think that MiCA is at risk of being outdated, because we were very careful in sort of looking forward and also trying to predict a bit kind of business models that would emerge. And there are even in MiCA certain services mentioned and regulated that weren't actually on the market when we proposed it, but that came on the market. But at the same time, there are also newer developments which have not yet been addressed, or were not addressed in MiCA, because by the time it was agreed, the activity didn't exist yet. I'll give you a specific example, which has been raised lately a lot, is staking. So as we move, or there are more blockchains which have rather than a proof of work, they have a proof of stake validation protocol. People who have these assets on those blockchains can surrender them for staking services, and they can then validate. It's very complicated and get rewards. And the activity of staking is a number of crypto asset service providers engage in that and provide services on it, and it's not covered by MiCA. So there's a question of, well, what does this mean? Of course, the legislator already anticipate that a little bit, because they said MiCA also doesn't cover crypto lending and borrowing, but as always with an issue which is new or which isn't quite clear how we should go, is the legislature then sort of passes it back to the commission and says the commission should report on this matter within, I think it's 18 months. So we will be doing a report in 18 months time on questions of non-fungible tokens, questions of decentralized finance, questions of crypto lending and borrowing. Those are specifically mentioned by MiCA, so we will do that and we will report on it and see if proposals need to be made or not. It's too early to say whether that's necessary, but it's not because an issue is not mentioned in that list that we will not look at it. So if there are other issues come up, we will most certainly address this also at the time we have to report on it, including also, we will also report on the experience we have gained so far with the process. And if there are certain things which are just not workable, where the level 2 can't find a solution, we will also bring those, we will also address those in that report that will eventually be written. I get often asked what's going to be in that report. I said, I don't know yet, because we still have 18 months to work on it. And 18 months is a lot of time in crypto space.
Sure, you can see some more country concerts over in Nashville in that time too. But one of the things that you did mention, and I'm going to come to you in a second, Tiana, on this, because it ties into the way some of the functions that a stablecoin can have. Peter, you touched on decentralized finance, DeFi, and we won't get into the big, complicated world that is, but a big attractive feature of this crypto technology is that you can have pieces of software which are called smart contracts. Stay with me. But these programs basically allow you to program payments depending on certain thresholds, as long as those thresholds are met. Now, stablecoins can fit into that. Can you explain how, Tiana?
Sure. So I think I would explain it a little bit differently. So if you think of kind of like a Google spreadsheet or an Excel spreadsheet, you have if statements and and statements. And so essentially it's like writing a macro. If this happens and this happens and this happens, then go ahead and execute the payment. And so what happens, in the meantime is that those crypto assets may be held in kind of a software escrow, waiting for those things to happen, and then the payment goes. And there are other ways that you can be programmatic about how those payments are facilitated, or cross-border remittances, for example. I think the one thing that I want to applaud Peter, because he is an EU treasure, being able to distill the difference between crypto lending, crypto staking, and what was the other thing you said? Lending. Borrowing, thank you. Yeah. All three very different things. And no, they aren't covered in MiCA, as are things like non-fungible tokens. This industry will continue, and it's not this industry. So let's just take digital assets off the table. Technology is rapidly racing ahead of us. Some of the crazy stuff that I'm reading about GPT-4, ChatGPT-4, and things that AI can do. If you're a regulator, how do you stay in front of that, right? So one of the things that I do think, comparing the way that maybe the process of law works within the EU and regulation is, instead of trying to solve for everything that might happen, if we could establish some principles around what sound governance mechanisms look like, then I think that we could put in place guardrails that would allow things to continue to evolve without going off the track, but without trying to be overly prescriptive for policy objectives that we don't yet know are coming. That's very difficult.
Yeah, for sure. I think one of the things that's also racing down on the technological front is this bid to introduce a central bank digital currency that you mentioned right at the beginning, CBDC. We'll call it a digital euro. Do you think that that's a good inclusion to the market?
So central bank digital currencies, to me, I think, I look at them through two different lenses. I think when you look at a wholesale central bank digital currency and what the central bank typically facilitates, which is the interchange of funds from bank to bank, that makes a lot of sense. We've been trying to solve that problem with tokenization for years. And a number of projects are kind of in pilot and haven't gotten off the ground. So I think a lot of efficiencies could be achieved at a wholesale CBDC level. Today, the central bank does issue cash, and so you and I walk around with cash, and so there is, a distant relationship between the consumer and the retail community and the central bank. But they don't bank us, right? There's a consumer bank that sits in the middle. And I think that to have the central bank provide that function feels a little complex to me when you consider, again, the rate of innovation. So will a central bank digital currency, the design is the most important thing. So if you're going to use open source technology, which is what we're using today for things like stablecoins.
Please explain what open source is.
So multiple people, anybody with internet access can access basically the code base, and you can build on top of that. And everybody can see what everybody else is doing. And without being too complicated or technical, the validators that we were talking about earlier kind of can contribute to whether or not things get added to the code base. And that's part of this decentralized open source information. And that's really the true innovation around blockchains. However you use them, whether for finance or healthcare records or, mortgages, house registries, whatever. And so if a central bank digital currency uses that open source architecture, then it will have the benefit of being constantly upgradable. If they don't, then what you're going to have by the time something is launched, I fear, is a legacy system that isn't able to be plugged into Web3, so the next iteration of the internet, and then you kind of wonder what was the point.
Ernest, let me jump to you on this. Do you see opportunity or risk in this whole new breakneck speed of technological innovation, and how do you think the central bank digital currency should hold itself in that?
Well, innovation is important, of course, but we need to be very careful that the innovation doesn't lead to unregulating bubbles. And we have seen in the past several crypto arcos breaking, and this is because there was a clearly lack of regulation. So we need to be very careful. I also think that the ECB is fully right, and the EU is fully right in having a sovereign digital currency. I think that is needed. Finance is moving to digital, that's clear, and the sovereign issuer should be not only present then, but be the principal actor, I would say, in that new world. And for the private actors, what we need is a strong regulation and try to avoid what happened in the past. Again, to go back to what happened with the sovereign, with the Silicon Valley Bank, to see one crypto actor having more than 3 billion in uninsured funds, having been bailed out at the end, because this is what happened. Sorry, this is what the FDIC did. I think that shows that we need stringent regulation in this world, as much as we have with the other financial markets. I want to insist on that. I think that from the regulatory perspective, same risks need to be regulated with the same rules. And at the moment, we have stronger rules for the traditional financial actor than for crypto. And I think we need to move for a kind of regulation that equalizes the risks and the regulations for all the actors.
Verena, I think you're nodding. I might have misread people's noddings, but it looks like you're nodding.
Bailed out. We weren't bailed out. Our deposits were returned.
Okay.
Say that again.
That's a bailout, if I understand.
But it's a shame you guys aren't both in the room together. Then this goes to show. Anyway, Verena, we get it. We'll use you to take us home here. You were nodding along with the same risks, same activities, same regulation.
I think there is this principle that clearly, particularly when, again, from the investor protection perspective, if you as an investor are looking at where do I put my money? Do I invest in, something crypto, or do I go and actually put my money in, I don't know, a fund or equity or whatever it is? Then clearly you want to make sure that there is a common investor protection framework. And I think Ernest is right. The reality is MiCA does provide some protection, but it's not exactly the same level of investor protection that you have in MiFID or other parts of the legislative regime. But what I wanted to also was nodding to this, that the fact is this technology is evolving very quickly, and we as regulators and supervisors need to remain agile to be able to deal with that. And so part of that is clearly opportunities. We see in DLT the fact that some of the efficiency gains that you can get from actually having some of these mechanisms on a kind of immediate and fast track through the blockchain has clearly a value. At the same time, they also present some risks, and we just need to make sure that we see the opportunities, but we also look after the risks as we do the supervisory and regulatory framework.
Ernest, Verena, Peter in Nashville, Tiana, thank you all so much. Everyone, please give them a round of applause as we close today. I'm going to let our spiritual leader at POLITICO, the finance team, Izabella, wrap it up, but that's all from me. Thank you all so much. Have a great day.